Okay, let's unpack this. Welcome to the deep dive. This is where we take your source material, could be your reports, research, you name it, and really drill down to find the most valuable insights. Think of us as your shortcut to getting what's really going on. Today, we're tackling a pretty hefty one. Excerpts from Bank of America's 2024 annual report. That's their big Form 10K filing.
Mhm.
Now, you might hear annual report and, think it's just dry numbers. But this is actually a look inside, based entirely on their own reporting, of how a giant like BofA works, where the money comes from, how they manage risk, what they're planning.
That's exactly it. The 10K, it's comprehensive, has to be. And it's dense. So
Yeah.
our goal here, like you said, is to slice through that. We're hitting the key areas that really tell the story.
Mhm.
Different business lines, the
Mhm.
financials, shareholder value, and, where they're putting their money for the future.
Right. So let's get started. To really get how this massive company works, we need to look at the engines, right? The report breaks it down into four main parts: consumer banking, global wealth and investment management, DRUIM, global banking, and global markets.
Mhm.
Let's maybe start with global banking. That's the part serving the big corporations, institutions.
Yeah, good place to start. And the story there in 2024 was pretty strong. What jumps out is they kept their spot, #3 ranking investment banking fees.
Okay, holding steady at the top.
Right. But even more, look at the growth. Total investment banking fees, and this is excluding deals they did for themselves, they surged 31% year over year. That's up to $6.2 billion.
Wow, 31%. That's a big jump.
It really is. Shows a lot of activity in M&A, underwriting, that kind of core fee business.
So what else is driving things in global banking?
Well, beyond the fees, deposits were solid too. Ending deposits grew 10% year over year. Hit a record, actually, $578 billion.
That's huge.
It tells you about those deep corporate relationships. They mentioned covering, 78% of the 2024 Global Fortune 500. When companies trust you with that much cash, it's sticky.
Makes sense.
And average corporate banking deposit balances also up 10%. So it's consistent. They're also investing inside, Mentioned boosting platforms like GCIB launch. Saw a huge usage spike, over 1.5 million page views. Suggests clients are adopting the tech.
Okay, interesting. So shifting over to global markets, this is the trading, financing, risk management side. The report highlighted something pretty remarkable here.
Yeah, this is where you see real consistency. The report calls out 11 straight quarters of year-over-year growth in sales and trading revenue.
11 quarters.
Yep, that's what, over 2.5 years? Continuous growth. They hit record revenue for Q4 and the full year 2024 in sales and trading. International markets also hit a record.
What does a streak like that suggest to you?
Well, it could be just great market conditions, sure. Yeah. But 11 quarters, that consistency points more towards, really effective strategy execution in that segment.
Yeah.
And the numbers back it. Record $18.8 billion in sales and trading revenue for the year. That's up 8%. And the loans backing that activity, average client loan levels, also hit a record $141 billion, up 8% too. Strong client activity.
Okay. Now, for the part most of us probably interact with, consumer banking. The scale here is just mind-boggling. Over 14 billion digital logins in 2024.
Yeah, and the theme here is growth and digital. They highlighted, get this, 24 consecutive quarters of checking account growth.
24, that's 6 years.
6 full years, added 1.1 million net new checking accounts just in 2024. It really shows they can attract and keep those core consumer relationships. That's fundamental, for the deposit base.
But how are they doing it? What's the strategy?
They call it digital first plus advice. So push hard on the digital side, and it's working. 79% of consumer and small business households are digitally active now. But they pair that with people. Access to over 35,000 folks in financial centers or on the phone. They also mentioned specific things like the Safe Balance account for families and a new online resource center for young adults. So thinking about different life stages.
Right, targeting different needs. And briefly, the last segment, global wealth and investment management, GWIM. Serving high net worth clients via Merrill and the private bank.
Yeah, this is about managing big money and giving tailored advice. Client balances, over $3.6 trillion at year-end 2024.
Trillion.
Yep. And a key number here is AUM flows, assets under management flows. Basically, new money clients are trusting them to manage for a fee. They saw $68 billion in those fee-based flows in 2024. Added over 20,600 new relationships, too. suggests the advisors are bringing in business.
And you mentioned advisor satisfaction.
Absolutely. They highlighted a record 95% satisfaction rate for Merrill advisors. That's critical in wealth management. That relationship is everything.
True.
And even here, high digital engagement. 85% of these households active digitally shows everyone values good tech alongside the personal touch.
Okay, so let's pull back from the segments. Look at the whole company's financial picture from the report. End of 2024, assets around $3.3 trillion, about 213,000 employees. Big numbers.
Huge. And looking at the core financials, net interest income, NII, that's the profit from lending minus deposit costs, it dipped a little in 2024, down about $871 million to $56.1 billion.
Okay, why was that?
Main reason side, higher costs on deposits. Not really a surprise with interest rates up.
Right, makes sense. So NII down slightly, but what about other income streams?
See, this is where other parts of the bank really showed their strength. Non-interest income, so fees from services, trading, wealth management, things not tied directly to lending margins. That was up significantly, like $4.2 billion higher, reaching $45.8 billion.
Okay.
And the report connects that straight to strong investment and brokerage services and those higher investment banking fees we talked about earlier.
So the diversity of the business helped. One area under pressure, others step up.
Exactly. It cushioned the blow from higher deposit costs. Overall net income for the year landed at $27.1 billion.
Got it. Now, the balance sheet, total assets grew by, what, $81 billion? Where did that growth come from?
Mainly in holding more debt securities. Loans and leases grew some, and trading assets. But interestingly, cash and equivalents actually went down by $43 billion.
Down. Where'd it go?
It wasn't like it just vanished. The report says it was mostly reinvested into those debt securities, trying to get better yields on their assets in the current rate environment. Strategic move.
Okay, shifting assets around. And how did they fund that overall asset growth?
Well, one key change was on the borrowing side. Things like federal funds purchased and securities sold under repurchase agreements, repo stuff, that increased by almost $48 billion.
Sounds technical.
It is a bit, but think of it as short-term borrowing, often using securities as collateral. The report says this was driven by client activity, especially in global markets. Shows the funding is dynamic, right? Responding to what clients need for trading and financing.
Right. The report also talks a lot about managing risk, credit risk especially. They use models, economic scenarios. Is there a concrete example of how that plays out?
Yeah, they gave one specific data point on modified consumer real estate loans. These are loans where they changed the terms, maybe because the borrower was struggling.
Okay.
The balance of these specific troubled loans dropped quite a bit. Went from $671 million end of 2023 down to just $264 million by end of 2024.
That's a significant drop.
And maybe even more telling, defaults on those modified loans also fell sharply. From $287 million defaulting in 2023 to $128 million in 2024. It's just one slice. But it suggests maybe some improvement in managing or resolving those higher risk loans.
So risk management sounds like it covers everything: operations, market, climate.
Yeah.
How does a company this huge even approach all that?
They talk about their responsible growth framework. The idea is that risk management isn't separate. It's baked into the strategy.
Integrated.
Right. And they point to their liquidity. Huge buffer. Their global liquidity sources average $953 billion in Q4 2024.
Wow.
And they also highlight they could raise another $328 billion quickly if needed by pledging assets to places like the Federal Home Loan Banks or the Fed's discount window. These are like, key backstops for banks. Shows they have access to emergency funds, reinforces stability.
Okay, that's reassuring. Now, for shareholders listening, a key question is always, how is the company returning value? What did the report say about dividends and buybacks?
Yep, crucial point. On dividends, they declared a quarterly common stock dividend. They're 26 cents per share, payable in March 2025. That's the direct cash return.
26 cents a share. Then share buybacks. Were they active there?
Oh, yeah. Very active in 2024. They bought back 332 million shares of their own stock.
332 million shares?
Total cost was $13.1 billion. They tie it mainly to their capital plans, which regulators have to, but also to offset shares from employee stock plans.
Right.
Buying back stock reduces the share count, can boost earnings per share. It signals confidence. And $13 billion is a pretty substantial return to capital.
Definitely. So let's try to wrap this all together. We've seen the segments, the financials, the shareholder returns. What's the overall message from the report about the road ahead? Where are they focusing?
The big theme is still that responsible growth, which means, keep investing in the businesses In tech, they specifically mention AI and quantitative stuff for efficiency and innovation.
AI is everywhere now.
It really is. And investing in people, too. They also see partnerships as key for growth. Mention new deals with U.S. Soccer and FIFA, using those big platforms to reach clients globally.
And their community work was mentioned too.
Yes, definitely. They highlighted things like responding to hurricanes, wildfires, employee giving combined with company matching was over $69 million, and employee volunteering hit a record over 2.5 million hours. Plus, progress on their $1.5 trillion sustainable finance goal, trying to show they're integrated with society.
Now, the report sounds generally positive, but it is a regulatory filing. It has to lay out the risks, right? What were some of the big ones they flagged looking forward?
Oh yeah, extensive caution sections. They're very clear it's a complex world out there. They point to legal and regulatory challenges, specifically mention things like an FDIC lawsuit, but deposit assessments, and ongoing LIBOR litigation.
Okay, specific legal hurdles.
Right, but also broader stuff. Economic conditions, obviously.
Yeah.
Interest rate volatility, geopolitical events, which are always a factor, and the impact of new tech, like AI. Even as they invest in it, they recognize potential risks too. It's a clear-eyed view of the uncertainties.
So wrapping up our dive into these Bank of America 2024 report excerpts, we've seen a picture, really, of a huge, diversified bank that seems to be executing its strategy. Strengths in global banking and markets, that consistent growth in consumer checking accounts driven by digital, and a clear focus on returning cash to shareholders while still investing for whatever comes next.
And the numbers mostly back that up, right? Asset growth, a jump in non-interest income, helping offset NII pressure, strong liquidity.
Right.
It is a pretty comprehensive view based on what they chose to report of their priorities and performance.
So what really stands out to you from digging into this report?
Here's something to maybe leave you thinking about. When you look at an annual report, this massive pain, it covers everything from global trading down to like employee volunteering and specific lawsuits. What bits of information, what data points or narrative threads do you think are the most telling? The most reliable signs of a big bank's real health and where it's truly headed? If you had to pick just a few things to look at first, what would they be?